Hey guys, what's up? Welcome to another episode with me, Shashank Godoppa. And in today's video, we are going to go deep dive into a very interesting company, right? So basically, we are getting this news from everywhere that Shashank AI is disrupting IT companies. Then AI came and disrupted my job, which was finance. Then they came and disrupted legal. But there is one company in India that AI cannot disrupt, at least for today. And the only thing that can disrupt this company is robotics, but that is very far away. So that is what we're going to look at. This fits my investment framework perfectly, which is I like looking for companies that have a very strong moat, or there is nobody else that can actually compete with this company. I like companies that can create beautiful cash flows, companies that can get high ROE, high ROC, because all of this leads to a multi-bagger, right? Now obviously in hindsight nobody can tell you what a multi-bagger is, but we try to look for some patterns that are constant across. So today we're going to go deep dive into this company. So I hope you guys are ready for this entire episode. Let's quickly begin. Also guys, a quick update for all the Fluid Q members who are there. Recently we went into cash. As you can see, we went into cash and gold because the market was falling. So we kind of timed it right. And right now we are at 3.71% up and the market is down 5%, which is not calculating today's fall. So market is actually down around 6%. So we are actually at an alpha of 9.71%, which is, absolutely wonderful from what I am looking at, right? So we kind of called it right. And that is why the performance is here. But if you guys have not updated this, please update it. And also we have a exclusive small case WhatsApp group. So if you have not been added to that and you have subscribed to it, send me an email and I will shoot you that invite. Awesome. Let's get into the presentation. By the way, this presentation we put a lot of effort into. So please give us some love at the end of the video, right? Now, the company that we're going to talk about is Urban Company. Now, all of you guys who think about Urban Company, think about carpenters, AC repair, plumber, etc. But Urban Company is actually not like that. Let me go deep today and explain what it does, why it is so strong, where is the money coming from, what are the future growth rate, and is it actually positive in cash flow or not? Is it profitable or not? Let me explain all of that today in this episode. Now, if you look at Urban Company, they came out with a bumper listing. The listing was very great. But after that, like all overpriced IPO companies who are making a lot of losses, Urban Company also fell down quite aggressive, right? So if you actually go and check Urban Company's price chart even today, you will see that it is not doing very great. Let me just open it for you. So if you look at it here, from the last 1 year, it is down 29%, and all time it is down 31%. It went up to 188 and then it's come down to 114, which is, I mean, for me, it's beautiful because it's a very interesting company sitting at 16,000 crore market cap as of today. Just remember this and I will come back to it very soon. So yes, the performance was not good at all. It obviously fell down like all other companies. But when nobody is looking at a company, that is when I like looking at such companies, right? Because I like playing contra and I like playing deep value. And if a company has lost to profit, I love it. Remember in this channel, I think 2 years ago, 1 year ago, I had made a video on Paytm saying it is becoming profitable. Nobody saw that video. After that, Paytm went up 85%. Because when Paytm is down, nobody wanted to see Paytm. Same way, Urban Company today is down. Nobody's looking at it. I'll tell you when the turnaround will happen also. Okay. See, what is the old problem and what have they solved? Old problem was the market was not good. It was fragmented. There was a lot of unorganized supply. Your carpenter and all used to be more of a referral system. And they said, okay, we will get an app. We will do the vetting process. We will take care of everything. We will fix pricing bands so that now it is smooth and simple process. And for people like me, this is great. For Gen Z is even better because we all want everything in 2 clicks. So that was the problem that they were solving. Now, if you look at how they actually do this, they went across the value chain. They first recruit people. They do training for these people. Then they give them the equipment also. So if you order a Urban Clap massage with that massage bed is by Urban Clap, and the massager, he has to buy this bed as well. Even the oils that you see that the massage guy gets has to be bought from Urban Clap. So not only are they making revenue from you, whenever you do any kind of service, the consumable items that are there are bought and borne by the partner, right? So he has to go buy it from Urban Clap, which actually makes a lot of money from there also. And then there is service delivery and review systems, so quality control. And if you look at, let's say, Uber and all the other places, Uber also does recruitment, then they put them in their own cars, they do the training. So it's basically an Uber kind of a system, right? Now, here is the beautiful analysis of this company, and then we'll go deeper into this, right? So if you look at Urban Company, 80% of their orders, or actually now it's gone up to 84% of their orders are usually from repeat customers. New customers come in at 15% and then they become repeat customers because think about it, right? First of all, there is no other competition. If you think about urban company and you want to book a carpenter today, where will you go? So as of today, there is no competition. Yes, that maid service that they have started or house help service that they've started, there 2-3 people are playing right now. But in the other segment, if I want a massage, there is no competition. If I want AC repair, carpenter, plumbing, there is no competition. And 85% of the revenue comes, 85% of the order, which is net transaction value, is actually coming from repeat customers. And that is insane. I don't know how you guys are looking at it, but this is a very, very, very strong and sticky number, because this shows that even if a competition comes, the existing guys will continue to stay in Urban Clap. Right now, coming to the revenue. As I said, all of us thought that Urban Company makes a lot of revenue from massages and this and that, which is their consumer service. By the way, consumer service is only 60% of their revenue. It is not 100% of their revenue. That is why I said Urban Company is playing a whole different game. So 60% of the revenue is from that. 26% is a new thing that they have started in this few quarters. You would have seen, if you open the Urban Company app, you will see something called Native RO. So they have started selling these AquaGuard type machines. AquaGuard is a brand. They're selling water purifiers, and they are selling Native RO purifiers, and they're selling smart locks. Now, why is this a genius move? If you look at the investor presentation of Eureka Forbes or any other water purifier company, the actual revenue doesn't come from product sales. Okay, product sales, so hey, they make some good margin on selling that entire water purifier, but that is not where they really make money from. The real money comes from the AMC, because water purifiers, once you sell it, you have to keep changing that water purifier, right? You have to keep changing that filter. And what we used to do is, whenever we want service, we don't call the AquaGuard or Eureka Forbes guy. Most of the time, we just go to Urban Clap and just get a water purifier filter. So now what they have done, they have got the water purifier and they give AMC packaged as a bundle, right? Which is a brilliant move, honestly. And you can see how that has moved from 90 crores in FY22. The revenue has gone from 90 crores to 186 crores, basically doubled in 3 years. The revenue contribution has doubled from this service, right? And if you look at India, it has gone from 300 to 694 in the consumer business. So both the consumer business and the native business are growing at 100% every 3 years. By the way, which is an aggressive growth rate, very, very, very aggressive growth rate. Now they also have something called international business, which I didn't know. I recently had gone to Dubai and I came to know that Urban Company is very big in Dubai, right? So Dubai, Singapore, these regions, Urban Company is doing very well. So you want your house cleaned, obviously it is going to be in dirhams. It is more expensive, but the margins apparently are very high and they made a lot of money. Now, because of the war-like situation that hit UAE, Urban Company's international business services has been disrupted. That means in the next quarter result, you will see a small dip coming from this yellow section, which will become a beautiful opportunity if you look at it from that perspective. Even this business went from 42 crores to 147 crores in 3 years, which went up almost 3.25%, 3.25x. So all in all, what I'm trying to explain is it is a very fast growing company, right? But if it is growing so fast in 3 years, why is the stock price falling down so much? Correct? The stock price is not moving because it is a loss-making company. So when they make profit, the growth will stall. All their problems are there, right? So let's understand a little bit more about this. So basically, what Urban Clap does is they take 20 to 25% from the service provider, which is the guy who comes to do the carpenter work or plumbing work. That person will be giving 20 to 30% to Urban Clap, which is the commission that Urban Clap charges. This is over and above the apart from this, consumables are separate. So if you want to go buy more oil, you have to buy from Urban Clap. You have to pay separately for that. So what is happening is, over time, the revenue is growing, obviously, which will keep growing. More and more bookings will come. Their marketing spend as a percentage of sales has gone down drastically from 2018 to 2025. That means today, because I'm so loyal and I keep using it again and again and again every month, I don't need to see another Urban Company ad. Right? Because I know if I have a need, I will just open that company and use that service. Right? Again, I forgot. I am a SEBI registered research analyst, and as per disclosure, I should disclose whether I have this company or not, or have I bought it or not. So just disclosing, I have not bought this company. I will tell you when also I'm planning to buy. I'm tracking it aggressively, but it is a very beautiful company to study, but I have not bought it as of now, not in my account, nor in my ancillary family members account. Okay. Now, coming to the products, they have a face care product. They have native RO filters, which is where they're making a lot of money. So basically, native RO water purifier is a good business. And the filters, as you can see here, is where they're making good margin. Roll-on wax is there. And also they are now coming with chemicals like Harpic. They've literally copied everything from Harpic, but they're calling it something else. It's called Azi Chemicals. Interesting. So basically, you have distribution. you have the entire distribution on your app. So if you have distribution, we can go all across the world, and that is exactly what they're playing. So as I told you, where are they? They're in Singapore right now, and they are in UAE. And they're making around 295 crores of transaction values coming from there, and 63% growth. Contribution is 17% profit contribution is coming there, and it is constantly growing. Now comes the next business that they are doing, which is Insta Help. Now you would have seen there are some companies in the market today, like Snapbit has come in very well. Pronto, I think, has also come in very well. There are three companies currently competing with this, and Urban Company had no plans to do this. This was not even on the agenda of doing Insta Help. But because they saw the competition coming in and they started doing really well, Urban Company has now launched Insta Help. So Insta Help, basically in 15 minutes, there will be somebody who comes to your house, cleans your vessels, cleans your floor, etc. etc. Today, Insta Help is looked at as a replacement theory. What is replacement theory? Today, everyone in whoever has a house help at home, when they don't come one day, let's say they say, I'm sick, I'm not coming, madam, 2-3 दिन नहीं आने वाला हूँ. So they go instantly on Insta Help or Snapbit or wherever, and they call for this Insta Help. Today it is a replacement theory. It is not a long-term game. But what Urban Company is saying, that one beautiful thing about this Insta Help is that the number of orders a person is doing right now in a month is going up, 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 and up. Because massage, you will not book 4-5 times a week, or maybe 4-5 times a month, right? Plumbing, you will not do 5 times a month. But Insta Help is something that gives repetitive business. So they keep making more and more money from this, because you can book it at least 5 times, 10 times in a month, depending on how bad your house help is. So today it is a very small business, 15 minutes they do it. And also this is highly discounted. Okay, I know in some places they're giving it, I did some scuttlebutt analysis, they are giving it at 99 rupees. Okay, to come home and do it. So they are making a big loss on this, and they are giving the service provider full money. They're not taking any commission from them. So today they're making loss, but let us see how all of this evolves. So as you can see here, 10 crores is how much they made net transaction value, and the adjusted EBITDA loss is 54 crores, which is a lot, right? So it better play out basically, or else it's a huge loss. But what they are seeing is that Insta Help is now becoming a game of unit economics. They have seen 3x growth in 1 quarter, because it is growing very rapidly. Snapbit, everyone, you look at the growth metrics, they are flying. So it is the demand was always there, supply was not there. Now supply is coming in. So the demand and supply now is getting matched. So huge amount of volume is kicking in. Efficiency curve is also doing very well. Earlier, every order they were losing 760 rupees. Now they're losing 380 rupees. Tomorrow they'll lose maybe 250 rupees. Then eventually they'll stop giving so many discounts, and they'll start making profitable over there as well, right? And the home services industry, as you can see, is massive. If you look at any global company, any global, let's say China or let's say US, most of the companies in their Nifty 100 or Nifty 50 in their countries are usually internet-based companies and platform-based companies, because these are the advantages of it. They're sticky, they have a moat, they're very strong, and they can ask anything from the customer and the customer will give. If today Urban Clap says, we'll charge you 20 rupees more, I won't even think twice. That is how it is, right? So look at how the Q3 results from a segment to segment standpoint. India consumer business without Insta Help, which is their plumber, etc., etc., currently sitting at 265 crores revenue. Adjusted EBITDA is 44 crores and is sitting in profit. Not net profit, because you have ESOP expenses in such companies. But they are sitting at 44 crores EBITDA, which is great. That means out of 265 crores, 44 crores is coming straight into EBITDA after all expenses. If you look at native brands, they are currently at 62 crores, but 4 crores EBITDA loss, which means in the next quarter, most likely this will become positive as well. International business, 50 crores, and they're already sitting at 4 crores EBITDA positive, which is crazy, right? But this will be affected in the next quarter. Now coming to Insta Help, they're making 7 crores in revenue and they're losing 61 crores in this. Now, this is the reason why the stock is not going up. But let me show you more interesting stuff as well, right? So if you look at their consolidated EBITDA, they're making 44 crores from the India business. They're losing 61 crores on the Insta Help business. So they're at minus 17 crores right now. Okay. Now looking at the growth, definitely the more India is becoming nuclear, the more it becomes interesting, the more we will see the growth coming into this picture. So they're definitely big. Now here, they have done something called densification. This is something very unique that Urban Company has done, where now, earlier, what used to happen is they used to have something called jobs per day. Whether it's a handyman category in Bangalore, they did this experiment, and they said that earlier, one guy used to go to so many different places and had a wider reach. Like in Uber also, when you book a cab, it's usually a geofencing that has happened. So now they're saying we will do densification. This guy will only get orders from this region. He will not go to another region. And what has happened because of that, the jobs per day went up for that person from 2.7 to 4 jobs per day. The daily earnings for that person went from 720 to 1000, and productive hours, because now you're not traveling up and down, has gone from 1.9 to 3.2, thus giving that person, service provider, also revenue, and it is giving urban company also good revenue. So Insta help looking at this model of densification, how does it become profitable? They are saying we need higher density in a particular pin code. Let's say JP Nagar or Jayanagar in Bangalore has a lot of demand. So higher density in a pin code, lower travel time for the professional, more jobs because they're not traveling so much, and that becomes higher earnings and better unit economics. And this is a flywheel. So they are creating densification across different pin codes, which is again very, very, very interesting, right? And for all of this, you don't need extra capex. There is no additional capex that is there. Native business, as I said, is improving very well. They first started only with your RO and filter. Now they're going into smart locks. Okay, again, filter replacements, AMC is coming in, but they have come into smart locks, which is low margin entry point. Then the high margin recurring business is filter replacement. That is why when I look at Eureka Forbes, again, not a buy or sell, I've not bought it yet. But Eureka Forbes, if you go and open their investor presentation, you will see the exact same thing. Beautiful AMC recurring revenues coming in, right? So coming to management guidance, what has the management guided? Again, take it with a pinch of salt. They said that India core margins expanded slightly ahead of FY25. They will expect consolidated break even by FY28 only because all the profits are now going in Insta Help. So they are saying in Q3 FY28, which means might get delayed by another quarter or two. So FY28, which is let's say 2 years away, that is when they will become break even and start making profit. And by FY31, with their growth trajectory, they should hit 1000 crores of EBITDA. 1000 crores of EBITDA, to put it into consideration, how much is the revenue today? Today, their top line is 1000 crores. Okay. And they're saying my bottom line will become, EBITDA will become 1000, means PAT will be around 800. That is basically what they're claiming. And if that happens in 5 years, obviously you can imagine where the stock price would be, right? Now, key risks obviously is churn. Today, they don't have any competition, but it's a very big company. If tomorrow Reliance comes into the picture, Tata comes into the picture for services, they will give a huge problem to this industry. And then this guy will have to again spend a lot on marketing, right? So again, there is no competition from online, but super competition from offline and unorganized market, because even today there are a lot of people who just call their carpenter and they will come and do the work, right? So that is coming in. New verticals, again, the contribution margin for old verticals are 20 to 30%. New verticals are actually not that great, right? If you look at the risk reward perspective, this I will come to the end. Okay, let me show you something else. Now, apart from this, obviously, as you know, we like learning more and more, and I'm very bullish on internet companies. So on Feb 26, JM Financial released another report, and I will show you only one part of this, which is the futuristic part of it, right? Everything else, what I told you, is pretty much the same. Nothing to do new stuff over there. And I also believe that a company, what is it today, will always be different tomorrow. Today, if they can do water purifiers, I'm pretty sure in the future they will do ACs also, because ACs also have gas replacement that they can make a lot of money from. Yeah, so this is what I want to show you. So as you can see, this is the EBITDA and EBITDA margin trend, and this is adjusted EBITDA and adjusted margin trend. Let's look at adjusted EBITDA. And let's look at normal EBITDA also, right? If you look at the normal EBITDA, which is not adjusted to other expenses, they were actually going to be profitable this year, right? They were already at minus 315, and this year they would have been profitable. Imagine a loss to profit story with urban company, monopoly, nobody's looking at it, beaten down company, fallen down 30%, suddenly becomes profit. But because of Insta help coming in, boom, it is going to go into loss again. So if you look at the adjusted EBITDA over here, you will see the same story playing out. They were actually profitable on an adjusted EBITDA standpoint, but they're going to go into loss again because they have to now play a very aggressive game. But FY28, they're saying we will become profit. Let's assume they become, at the end of FY28, they become profitable. Let's say 2-3 quarters, or we will give it up. The day they become profitable with such a big business, such a big moat, no competition as of today, the day they decide to switch off the marketing engine and switch on the growth engine, their EBITDA in crores will be 72, 358, 662. Not just EBITDA, they will also become supremely rich with respect to free cash flow. Because if you think about this company, they don't have so much expense at all. It's a platform play, right? Repeat customers are going to give them most of the revenue, right? So they are going to become very, very, very profitable over a long period of time. Today, their free cash flow is not great, but their free cash flow eventually will become supremely good, right? So let me show you the financial analysis over here. So definitely, as you can see, the EBITDA, once it starts going up, it is crazy. Here comes the cash flow and free cash flow. Now look at this. If you look at the cash flow trends, let's assume FY28, their cash flow will be, let's look at only free cash flow. The free cash flow will be 118 crores, 390 crores, and 625 crores. So basically, if this company gets out of the growth mode, spending mode, and gets into the growth mode, just switch on that engine, oof, this will start creating massive wealth. And today, this company is available, let's say, at what is the market cap of this company? 16,000 crores. That is not even $2 billion, right? 2 billion, 1 billion is 9,200. So 2 billion, less than $2 billion, this company is there today. Supremely, I would say, I would not say undervalued because there is a lot of unknowns, but it is a very fast growing company. And there is nothing to say that tomorrow this company can't become a large cap company because it's a monopoly, right? If you look at the big companies today, there is Zomato, there is Policy Bazaar, then there is Paytm. These are the three companies sitting at the top level of the entire ecosystem, and Nykaa. So four companies are sitting in platform companies. That also, I think JM has done a beautiful analysis. I can show this to you. As you can see, JM has done a beautiful analysis of internet companies. So over here, these are all the internet companies, out of which Zomato is very big, from a market cap, $26 billion market cap Zomato. After that, we have Swiggy at 9.3 billion. We have Nykaa, which I told you, at 8.4. InfoEdge is 7.5. Policy Bazaar is not, PB Fintech 7.7. So most of them are here. Urban Company sitting at 1.8, which is actually very cheap compared to, let's say, Black Buck, Car Trade, and India Mart. India Mart, we recently saw Nalanda Capital coming in. Car Trade, very seasonal, depending on car buying. Black Buck, beautiful company. If you want, I can do a separate video on Black Buck. I have the whole PPT ready because we did it for one of the events. But this is again a good company, but slightly overvalued. Whereas Urban Company is actually not overvalued at all. It has been beaten down badly, and it will be continued to get beaten down for the next 2 years. So if you ask me, is it a buy today? As I said, no. I'm tracking it very closely. I don't want to buy it today. But it is, I'm watching it like a hawk, because if I look at it from a 10-year standpoint, this has everything to become a multi-bagger. As of now, it is not ready. It is still taking its time. But the minute free cash flow kicks in, the minute that growth engine kicks in, it will become beautiful and very nice. Again, guys, after a long time, we did a deep dive in a specific video. So again, I hope you guys liked it. It took a lot of time to create these PPTs and then make it. But if this is something you like, I can make more such PPTs and come and show you more interesting information about companies. I can give you some information. We have Black Buck ready. I have IEX ready. We have one more computer proxy company ready. We have our global international company ready. So we have like 4 companies that are already made, which we usually give it to our internal clients and all of that. But if you are interested, happy to come here and show it to all of you guys. Again, thank you guys for watching this video. And if you have any doubts, any questions, please put in the comment section below. The markets are not great, but it's our job to keep learning even in a bad market and keep tracking very good and interesting companies. Awesome. This is me, Shashank Godupa, signing off. Take care. See you. Good night. Bye-bye.